Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about another company in the EMS space. So we will discuss about PG Electroplast, which is one of the most consistent performers in this industry. The stock has given massive returns to its investors in the last 2 to 3 years. And even from here, the growth is still intact. If you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Before we begin, I'll give you a small disclaimer. This is not a stock recommendation. These are stocks which are chosen by the audience itself in our Telegram channel through a poll. I am a SEBI Registered Research Analyst. I or my clients may have positions in the stock. My views on this company or the stock may change by any major development in the company or after the quarterly results. This is a crisp video, so it's not a full-fledged video. I'll cover only the important points in this video. This will be the flow of our discussion. We'll talk about the business model first, then we'll look at the charts of the stock performance in the last few years. We look at the financial performance, we'll talk about why the stock has given such a massive rally, what is the outlook of the management going forward. We'll talk about the valuations at present, the risks of investing in this business, and then form an overall view. So this company was started in 2004. It is into electronic manufacturing services. They manufacture a lot of electronic products and FMCG goods. It's an original design manufacturer, so even if you approach this company with an idea of any product, they will design the product for you, develop the product, manufacture it, test it. So they do the complete cycle as they are backward integrated. They work with more than 70 global brands in India and abroad. They have more than 5,000 employees and 10 manufacturing units. These are the different industries which they work in: air conditioners, washing machines, LED televisions, air coolers, automotives, bathroom fittings, and consumer electronics. So you can see that the product range is quite wide. So these are the different business verticals which are similar to the industries they serve. They manufacture room air conditioners, washing machines, air coolers, plastic molding and other products, electronics and tools. So they not only manufacture the complete product, they also manufacture some components or parts of these products. They work with all well-known brands across the FMCG industry. They work with Acer, they work with A.O. Smith, Bajaj, Astral, Blue Star, you name it, any big company in India or a global brand is their client. Product wise or vertical wise, this is the split. They get a revenue of almost 60% from their product business. From their plastic and others business, they get about 25%, electronics about 13%, and rest of the revenue from the molds. The stock has given consistent returns over the last 2-3 years. From the price of about 100 rupees, the stock has given almost 10x returns in the last 2-3 years. It touched a price of almost 1050, and then in the recent market correction, it came to as low as almost 600, giving you a buying opportunity if you have confidence on this company. And right now it is trading at around 863 rupees. So this is a perfect example of buying a great company during the bad time in the market. The company also raised 1500 crores as a QIP in recent 2024 at a price of about 699. In terms of revenue, they have delivered consistent growth. They did about 700 crores of revenue FY21, which rose to more than 4,000 crores in the trailing 12 months. So by this you can see that this is one of the fastest growing companies in India in the recent times, especially in this sector. EBITDA wise also the growth is similar. They have done a 50 crore EBITDA in FY21, which rose to almost 389 crores in the trailing 12 months. Margins have slightly expanded. They did about 7% earlier, which rose to almost 10% now. In this business, 10% is a very good margin. Promoter holding after this dilution of 1500 crores came down to below 50, which is about 49.4% now. Inventory days are 90, so they are not much, but we have to keep an eye on this figure. Working capital is very well managed and working capital days are just about 59. This shows the efficiency at which they are running the company. Now, what led to this massive rally in the stock in the recent years? The growth performance in terms of revenue has been very consistent. Margins have slightly expanded, and as the revenue growth was very high, a small expansion in the margin will lead to a very high jump in the profit number. Valuations have got re-rated in this company, and this theme of electronics manufacturing was in focus post-COVID as a China Plus One theme. And even now, even the recent budget, government talks about this theme, and there is a lot of expansion still pending in this sector in India. Before we move on, if you are not a part of our Telegram channel, do join today by searching my name on the Telegram. It's a free channel. Every day morning, I share my views on the market. I also share portfolio allocation strategies which will help you increase your returns. There are more than 7,000 people who are in touch with me on an everyday basis through the channel. Now, what's the outlook of the growth by the management going forward? They're just about to make the second manufacturing plant for air conditioners operational at Bhiwandi. They have a very robust order book and they plan to do a revenue of almost 5,100 crores in this year, which will be close to about 70 to 80% growth compared to last year. They have raised 1,500 crores to fund this growth. They want to focus on three things going forward: research and development to develop new products, add new verticals, and also enhance their capacities. And to do that, in FY25, they plan to invest a total of almost 370 to 380 crores in capex. They still want to focus on the margins, and they want to expand the margins beyond 10% also, which is very good in this sector. Now let's talk about the valuations, which is the critical part. The stock has already got re-rated. It was trading at around 40 to 50 times for a very long time until 2024, and then it has got re-rated recently to almost 100 times. So there has been a massive re-rating in the valuations of this company, and further re-rating looks difficult from these kind of levels. In terms of trading 12 months, the price to earning ratio is about 115 and price to book ratio is 12x. Market cap to sales is about 6x. This is not a pure value buying opportunity as an investor. Now, what could be the possible risks of investing in this company? There could be a slowdown in demand in this sector. That could be a risk. Competition wise, there are capacity expansions coming from the existing and new players. Technology is a risk, as they have to completely be up to date with all the products, all the technologies. Otherwise, the clients will not give them orders to manufacture them. Valuation wise, it is very pricey. So if they miss out on their estimates, the correction can be very steep. Working capital so far has been managed very well, but if there is something which can go wrong in that, then the growth can be hampered. So now that you've understood the business model of the company in brief, you've looked at the financials, you've understood the growth prospects, the risks, the valuations, what is our view on the stock? If you're already holding the stock from a lower level, you should continue to hold because the growth in FY25 and 26 still looks intact. If you're looking at a fresh entry in the stock, this is not a pure play value buying opportunity at these levels. You should wait for the valuations to cool off, and then you should gradually accumulate. So these kind of companies, as we saw on the chart, during the bad times, they give a sudden jerk in the price, which gives an opportunity to enter. So you can wait for one such day again and look at entering this stock. So that's about PG Electroplast. I hope you like the crisp analysis. I've tried to keep the video very short to cover only the important points here. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names of the stocks in the comment section. Even this stock was picked up from the comments in the last video. Do join a Telegram channel to be in touch with me on a daily basis. Thank you for watching and have a wonderful day.